Hi, my name is Rick Dunnett, and I am a senior financial consultant with Hammer Financial. And I'm reaching out today just to have a quick discussion about an issue that comes up a lot at this time of year. It is tax season, and the issue of phantom tax. Now, this is a rather broad spectrum, but in order just to stay focused on this, what we're going to be talking about specifically in this case is the phantom tax that comes from using mutual funds and non-qualified accounts. So the definition of phantom tax here, looking at Google, it occurs when an individual is taxed on the value of their stake in a partnership or agreement equivalent, even if they do not receive any cash benefit compensation. So basically what happens is it's important to understand what a mutual fund is. It is actually an investment company. Under that investment company, the portfolio manager makes a series of investments into numerous companies. Now, the biggest problem that happens is that people who were interested in saving, so I mean, they filled their 401k or 403b, their group plan. They put money into their IRA, and then they put money into their Roth, and then they had additional monies left over. So then what they did in most cases is they contacted companies like Vanguard, for example, and every month they were periodically putting money in, and it worked well. The market had swelled. They have amassed vast sums of money. However, the problem being is they don't have any control of the taxable events that happens. Should the fund manager wish to lock in gains of any particular company, think about the Googles, the Microsoft, Teslas, Amazon's, companies that have soared for the past several years. Should this fund manager be in need of locking in some of these gains? Because once the market peaked in the end of 2021, all these stocks are lower. So what happened is the fund manager running an investment company sold a portion of these companies. Now, this was done in order to, again, to realize some of these gains. And if you had these same holdings in an IRA, a qualified account, this conversation is moot. It doesn't matter. The protections of your IRA would limit you. There wouldn't be any taxes. You'd be taxed as ordinary income when you took it out. But again, because this isn't a non-qualified account, what happens is, even as a long-term investor, if you were the owner on record, even if you didn't sell it, you would receive a 1099 at the end of the year or just after the first of the year, where you would be responsible for the percentage of that NAV, that net asset value, the price of the mutual fund that they were distributing the gains on. You could have possibly even bought the stock on the last day of December and paid the top dollar. Your holdings could be lower by all accounts. But if you were the owner of that mutual fund at the point they distributed capital gains, even if, again, they were realizing gains from the last 10 years of accumulation, as the owner of that stock in a non-qualified account, you have to pay taxes on it. So again, this is very problematic. And so probably one of the more problematic items that we see for people whom are just trying to do the right thing and save money. We would suggest a couple of things. If it is after tax savings you want to do, use individual stocks or ETFs, exchange traded funds. They are treated very much, or actually you invest in them very much the same way as a mutual fund. However, there isn't a fund manager that is going to be selling them. Each of the stocks are kept in a basket, so they are a lot more tax efficient than you would find in a mutual fund. The also consideration about this is, should you be in retirement, or let's say that you are collecting Social Security and Medicare, the amount of these gains that are pushed through will affect whether or not your Social Security is taxable and to how much. For your Medicare, which is means tested, the IRMA guidelines, that these phantom taxes coming through can have a lot to determine on how much you actually pay for your Medicare. So a lot of these topics with our library that we are developing here at Hammer, you'll see a lot of information about tax. I highly encourage you to look through our library, look for provisional income, and look for just the Tax Cuts and Jobs Act. Understand what's happening in taxes. It will be very important for you to try to keep as much of an efficient tax plan as possible.